India has emerged as a shining light here at the IMF Annual Meetings in Washington, D.C. And joining me is someone who's been steering that economic narrative. Dr. Arvind Subramanian, India's Chief Economic Advisor. Thank you so much for speaking with NDTV. So let me begin with the recent paper that you wrote in FT saying that the West must manage its decline while the rest sustain its dynamism. Are you seeing India telling a completely different story from the global growth pessimism that we are witnessing here at the fund?
Yeah, so in fact, just to make it come alive, I was at a session on fiscal policy around the world, and the session was called Fiscal Policy in the New Normal. And there were the Canadians, the Germans, the Europeans, and the Americans. And the moderator began by saying the new normal is defined as low growth, high debt, and zero interest rates. And I said I feel like an interloper in this because we don't have any of these three. We have high growth, relatively low debt, and interest rates which are not zero. So in that sense, this annual meetings, India a little bit stands out in a nice way, in a positive way, because the overall atmosphere is one of relative gloom. All sorts of challenges around the world, unconventional monetary policy, has it run its course? Europe, what is going to happen? Is the Japanese experiment succeeding or not? The oil economies are still a thing. But in that, and of course China has the whole, although its growth forecast has been increased, I think it has its own challenges, and we stand out as the fastest growing economy in the world. So that's quite, and even if you look at the IMF's forecast, which they've kept it unchanged, but by rebalancing, by reducing the growth forecast for the advanced economies and upping it for the developing countries. And so that fits in with the question of, the West having to, kind of managing decline while there's still a lot of dynamism in the emerging market world.
The IMF directors and the global business community here, sir, have also told me that they see an upside for the Indian growth targets, which is 7.6% currently for the next 2 years by the IMF. They say it could exceed more than 8% to 8.5% with the successful implementation of the GST. What can you assure them?
See, firstly, I think, we have to be very careful in saying that if you do any one piece of reform, growth will take off. I think, growth happens because a number of things are done well. And of course, also the international environment has to be conducive. I mean, that being said, I do think that the GST and what we've done already has really made investors, come alive to the Indian story, because it's such an important, such a difficult reform that we've managed to get through. And yes, absolutely, therefore, getting it passed on time, which is the April 1 deadline, will be very important. And I think the government is doing everything it can to ensure that we meet the April 1 deadline.
In recent weeks, we witnessed heightened tensions between India and Pakistan across the line of control. Pakistan occupied Kashmir. Do you feel that geopolitical tensions have become an issue of concern for the global business community? What could be the spillover effect as well to the rest of the region?
My own sense is that it's not been a big issue here. I think that partly because the situation has calmed down, and there's it's not kind of in any way seeming to escalate or so on. So it's not. I mean, in my interactions, it's not come up as a big theme. I do think the more there is volatility of a geopolitical variety, it'll always affect investor sentiment. So,
is that guarded optimism coming from the RBI's new governor as well? The ability to show a more accommodative policy, which we've clearly witnessed with rates at 6-year lows, and a flexibility to go even lower, coupled with a fiscal push and a cleanup of the NPAs. Will that combination perhaps make for growth, which is even greater than 7.6%?
See, I think on monetary policy, I think the fact that inflation has come down has created the scope for more easing, and that's what I think the RBI has done. Now, in terms of the other questions about NPAs and so on, I mean, I don't know enough, and we have to see how things evolve. But I do think that the fact of inflation coming down is what creates. It's the fundamental reason why I think interest rates are coming down and perhaps could come down more. That would depend very much on the data that we see. We do have, in all the bright spot that India is, I think the one challenge, the macroeconomic challenge, is what we call the twin balance sheet problem, the state of the corporate sector balance sheets and public sector bank balance sheets, and that's something that we'll have to. That's a challenge we have to meet, in the months ahead.
My sense from institutional investors is that they are eager to allocate even more assets to India within their band of emerging markets. Do you feel that this can be spurred on? We already have record rates, but can we see an increase from the current base as well?
Yeah, I think, remember, this has been happening for some time. Last year, FDI, India was the highest recipient for FDI. Again, we've jumped up in the competitiveness rankings. And I think it's all based, in my view, on, if you look at the last 4 or 5 months, the legislative accomplishments have been very impressive. Just think of, bankruptcy, codifying the Monetary Policy Committee, the Aadhaar bill, and of course the GST bill. Apart from the fact that we had a package for textiles and clothing, there's the FRBM, and of course, most recently, the tremendous success that the government has had with the voluntary disclosure scheme. So it's all finally based on actions and positive legislative achievements and reform actions. So I think that's the basis for this investor sentiment turning around.
There's been immense conversation about the Federal Reserve and its reluctance to raise rates. In fact, the ability to cut rates or possibly even go to a negative scenario. How does this Fed spillover impact India? And to a great extent, do you feel the scars of 2013 still remain?
So I think that I don't worry that much about Federal Reserve actions, because I think actually the analogy with 2013 is a good one. There, remember that when the Fed, the taper tantrum was announced, there was a reassessment of, capital started going out. But then I think markets started to discriminate between the ones they thought were vulnerable and the ones they thought were not vulnerable. And India at that stage was amongst the vulnerable countries because of a macroeconomic situation. Today, I think when they apply the same test, India is going to come out in the other direction of being amongst the best, the most solid, and the least vulnerable ones. So in that sense, I don't worry that much about quite apart from whether the Fed is going to raise and how much and when. That's a kind of guessing game that one doesn't want to get into. But even if that were to happen, India's position is relatively strong and solid. So I don't see any major impacts on India.
Do you think all global central banks, Dr. Subramanian, are moving in the same direction, essentially either cutting rates to perhaps even a negative territory or staying status quo?
That's a good question. That's it's a tough one, because I think that, for example, the Japanese are having a debate. The ECB is kind of on hold. The US is wondering what to do. It's difficult to guess, but one thing one can safely say is probably that we're not going to see more unconventional policy. Whether we're going to see a withdrawal from that and the pace of that, and where it's going to happen is much more difficult, I think.
So we won't see unconventional policy, but can we see unconventional politics? Because we are in the midst of perhaps the most important election in the history of the world. And with presidential candidate Donald Trump talking about protectionism, anti-globalization, what could be the impact on India?
Yeah, so in that piece that you referred to that I wrote in the Financial Times, I think that we can't second guess what's going to happen in terms of American politics, but there is a general disenchantment with globalization around the world. And I think that's not good news for countries like India, because, as I've said before, if you want to grow at 8 to 10%, we need open markets globally for our exports of goods and services. So anything, anywhere that threatens that is not good news for India. So I think, therefore, we need to be in the forefront of those who are, championing open markets, keeping markets open, and in turn we must contribute as well by keeping our markets open as well. So I think it's it's one of those situations where I feel quite strongly that we have a stake in ensuring that globalization doesn't attract the kind of backlash, because finally it'll come back and bite us, I think.
And a final question: what would be the main message that you're taking away to India from the IMF annual meeting?
Yeah, headline for India, of course, I think is that, clearly we are standing out now, but of course, to maintain that thing, we have our own reform agenda domestically, and I think we need to, act on that and implement that, because then this position of ours internationally will only get reinforced. And of course, the first big such one is the GST, which has to be, finalized and implemented. So I think that's going to be very important.
Thank you so much for speaking with NDTV, sir. It's been a real pleasure.
Thanks very much.